Kamala Harris or Donald Trump. I mean, regardless of your stance, I'm talking to folks every single day who tell me that they're waiting to buy or invest in real estate until after the 2024 election. And I totally get it. Like, election years always feel a little bit uncertain. But the reality is the housing market moves in cycles that are far bigger than any one election. In this video, I am not going down the political rabbit hole, but instead, I want to just stick to the facts. And I want to break down what a Harris or Trump win could mean for home buyers and investors today. But before we dive in, if you find any value in this content, make sure to give this video a thumbs up. And if you're new here, don't forget to subscribe to my channel so you don't miss any of our weekly updates on the housing and mortgage markets. So I want to ask you again, what exactly are you waiting for? Is it a change in interest rates, economic policies, or new housing incentives? I mean, ultimately, I believe the decisions that you make today have way more to do with your personal goals than the political headlines. Having said that, many are in fact waiting, and I've been searching for why. So by the end of this video, you'll have insight of the potential benefits and risks under both parties' platforms and how to make strategic decisions for you personally. Whether you're buying your first home, your next investment, or you're looking at buying a luxury home. But here's the spoiler alert. For the traditional buyer, the impact may not be as big as you think. But for the strategic investor or luxury buyers, there may be more to consider. Let's start the conversation with a traditional home buyer. Now, for a typical family looking to purchase a home, the reality is this. Elections don't dramatically change mortgage rates, housing prices, or lending policies, at least not overnight. That being said, here's what you might expect under each administration based on their platforms and economic approaches. Under a Harris administration, there's potential for stronger government intervention in affordable housing policies. We could see programs aimed at reducing housing inequality, expanding access to first-time homebuyers through down payment assistance, and increasing housing supply for lower and middle-income families. And of course, there's much talk right now of Kamala Harris's proposal for the $25,000 in down payment assistance to help first-time homebuyers with upfront costs, like the down payment and closing costs. The idea here is to help lower and middle income buyers who are often priced out of the market. In addition, Harris is pushing for a $10,000 tax credit, which could be claimed on your tax returns after purchasing a home. I mean, that sounds great, right? But here's the catch. Neither of these programs have been passed yet, and new regulations like this can take years to roll out. Additionally, programs that spur buyer demand typically result in increased home prices. So if you're sitting on the sidelines waiting for this assistance, it might end up being a longer wait than you think. And in the meantime, home prices could keep rising with a strengthening housing market, making it harder to afford that dream home. And the downside? Increased regulation might lead to delays in new developments or more red tape for builders, potentially slowing down the availability of homes in high-demand markets. Now, under Trump administration, Trump's approach is a little bit different. Instead of direct financial assistance, he focuses primarily on deregulation to speed up the housing development, which could ultimately bring more supply to market. Here are his three key strategies. His first is deregulating construction to make it easier and faster for developers to build new homes. His second is lower taxes to stimulate economic growth, including keeping capital gains taxes low to encourage real estate investments. And the third is opportunity zones, which offer tax incentives for investing in underserved areas. While this isn't directly aimed at first-time homebuyers, it does encourage more housing and investment in areas that need it. However, if you're in need of affordable housing programs or assistance, there aren't as many opportunities for assistance or lower cost options in Trump's plan. So bottom line, for the traditional buyer, someone looking to purchase a home to live in, neither candidate seems poised to make drastic changes that will affect your ability to buy a home tomorrow. If you're in the market, it might be better to act based on where the market is today rather than waiting for election results. So let's jump over to the real estate investors. Now, this is where things get a little more interesting. Investors tend to pay closer attention to elections because the economic policies that follow can have a bigger impact on real estate investments. Under a Harris administration, we would likely see continued focus on affordable housing, rent control in certain cities, and policies designed to protect tenants. On the flip side, higher taxes on capital gains and wealthy individuals could be a concern for some investors, particularly in the luxury space. The potential pros: if you're focused on multifamily or affordable housing developments, the push for more government funding might increase opportunities in lower and mid-income rental properties. And the $25,000 down payment assistance program, if passed, might also boost demand for affordable housing homes, raising prices, making it a great time to invest in that segment. But if you're a wealthier investor, higher taxes and more regulations around rents and tenant rights could reduce returns in certain markets. Under a Trump administration, he is expected to lean in further towards deregulation, tax breaks, and pro-business policies, potentially rolling back some tenant protections or keeping taxes on capital gains low. The Opportunity Zones initiative could also continue, making it profitable to invest in distressed areas with tax incentives. If you're a high-end investor or involved in commercial real estate, this approach could offer opportunities to expand your portfolio with fewer government regulations. The pros here: investors in commercial and luxury, as well as high-end properties, could continue to benefit from favorable tax policies and fewer restrictions. Development, especially in areas with less regulation, may move faster and be more profitable. The cons: if you are relying on government programs or tax incentives for affordable housing investments, a Trump administration might not provide any opportunities in this sphere. And potentially rising interest rates as tax cuts could spur economic growth in a Trump administration, could dampen the appeal of lower tier rental markets. So bottom line, if you're a luxury home investor or you work with high net worth clients, waiting for clearer tax policies or market conditions post-election could be a smart move. But if your focus is on affordable or mid-market investments, neither administration will likely change your plans in the short term. Now, for those of you in the luxury market, whether it's a second home or a high-end investment property, this election could make a bigger difference. Under a Harris administration, there could be an increase in taxes on higher earners and a focus on redistributing resources to support affordable housing. This might mean fewer tax breaks or incentives for luxury properties, making them a less appealing investment for some. Under a Trump administration, on the flip side, Trump's policies typically favor lower taxes for high net worth individuals and fewer regulations on luxury real estate, which might continue to keep that market hot for investors and buyers alike. So if you're in the luxury market, you might want to wait and see how the tax laws shake out. The next administration could significantly impact what kind of tax breaks or liabilities you'll face when purchasing a multi-million-dollar property. All of this to say, if you're a traditional home buyer, you're probably safe to move ahead now. This election is unlikely to change your home buying opportunities overnight. But if you're an investor or in the luxury market, paying attention to tax policy and market conditions post-election might be worth the wait, depending on your individual situation. Either way, knowledge is power. Don't sit on the sidelines alone. Let's figure out the best strategy today, so you're prepared when the time is right for you. If you think that time could be now or in the near future, please reach out to me using the information in the caption or drop a comment down below. And if you want even more insights into the current state of the housing market, check out the video I have linked on the screen now. And I'll see you next time.